Good morning. Today we want to talk, we are in chapter 32 already, so today it's circular flow of income. That's the topic. And when we talk about circular flow of income, we're talking about a model that demonstrates how money moves back and forth within an economy. So here it is a model which demonstrates how money moves from producers to households and back again in an endless loop. So it goes in and comes out, it goes in and comes out, so it doesn't end. That's what circular flow of income means. So we have income, output, and expenditure. So when we have to measure the output of a given economy, we have to measure it based on the income, the output, and expenditure. So for macroeconomics, they are concerned with what? The economy as a whole, which means it's about the level of total output. So for macroeconomics, because when you have to discuss the macroeconomics, we're talking about understanding the nature of the whole economy, the economy as a whole. That means what is being produced and sold within that economy. So that's what macroeconomics is about. So to calculate the national income, consideration has to be made based on the kind of model of the economy. So if we have to calculate our national income, which is the same as the level of total output, we have to understand the kind of economy we are running. Is it a closed economy or an open economy? That's what the model is about. So if the model is about closed economy, so now we have to talk about a closed economic model. So for a closed economy, a closed economy is that economy which does not participate in international trade. So this economy does not participate in international trade, meaning there's no imports and exports of goods and services in this economy. That's why we call it a closed economy. So households and firms are in charge of allocation of resources. There's no government intervention and there's no international trade. That is what a closed economy is about. So what is the goal of a closed economy? The goal of a closed economy is complete self-sufficiency, providing domestic consumers with everything they need within the country's own border. So for a closed economy, what they do is self-sufficiency, producing goods and services that are needed within the economy and are being produced within the jurisdiction of the economy. That's what a closed economy is. But note, in today's interconnectedness, because of globalization, it becomes difficult to have a closed economy. So closed economy is more of a theory than a reality. So look at what I wrote here. Note, in today's interconnectedness, which is the same as globalization. So closed economies are more of theoretical concepts rather than reality. So it means it is difficult to find an economy that is closed because there's globalization, there's interdependence of economies. So, but we have to know that there are some countries that are closed than another. So they might not be totally closed, but some are closed than another, but they are not totally closed. That is what a closed economy is about. I mean today, because there's interdependence and there's specialization. So with specialization, it means we have to sell goods and services to outside of the world. And we have to buy from outside of the world. So that makes it difficult to have a closed economy. So in a closed economy, households own factors of production used by firms to produce goods and services in return for interest, wages, rent, and profit. Which means households in a closed economy, factors of production are owned by the households, which they sell to firms to produce goods and services, in which these firms will have to sell back to the households for income. As revenue. That is what an household is. So look at the screen for further explanation. So this is a typical simple economy which is the same as simple economy which is the same as a closed economy. So what happens in a closed economy? Look at it. Households, they own land, labor, and capital. They sell it to firms. And when they sell to firms, firms pay back in return of rent, wages, interest, and profits. Households own factors of production sold to firms. Firms will pay back in terms of rent, which is the reward for land, in terms of wages, which is the reward for labor, in terms of capital, which is the reward for interest, and enterprise for profit. As soon as this is done, firms will now produce goods and services. As soon as firms produce goods and services, they sell to the households. Selling to the households will spend on these goods and services as expenditure on goods and services, which they have to pay back to firms. So it continues like that every now and then. So it is an endless loop. That's why we call it an endless loop. Households have factors of production. They sell to firms. Firms pay back in terms of rent, wages, interest, and profit. As soon as it's been paid back, firms produce goods and services.